Well, as you know, insurance in Florida is absolutely out of control. The average insurance rate is $6,000. So at this moment, we are in April 2024. And what can you do to save some money on insurance? Let me tell you, if you're thinking about buying or relocating to Florida, what can you do to lower the insurance rates, but not just like one time, 1 year, but something that can continually give you discounts year over year over year, where that improvement that you end up doing ends up being free after a certain while. Okay, before we get started, my name is Maciek Zaremba. I'm a real estate agent in Sarasota, Florida. If you want to call me, 941-888-SOLD. That's my number. But let's get started. What is the first thing you can do? Well, it all depends on your eligibility, right? Because the rate of your insurance is one thing, but the eligibility is quite another. So let's talk about that. So first, we're going to address eligibility, because this is one of the ways that you can save money, right? Eligibility has to do with this. Look at it this way. If you're going to go shop insurance with your new home, or maybe something that you're interested in buying, you have to ask yourself, how many carriers are willing to write a policy on this property based on the risk assessment of the things about that property. For example, how old is that property? How old is the roof of that property? What kind of electric wires do they have? What kind of plumbing do they have? There's a whole bunch of things. Is it in a floodplain or not? There are so many questions to ask. But the easy answer is this. If you buy a new home, every company is going to want to write you, because the probability of a problem and a claim is extremely low. But not everyone can afford new construction. I understand that. You're pretty much paying absolute full price on new construction, if not more sometimes. However, a lot of people are going for that option. In fact, 30% of all sales in Florida right now are new construction. And I'm willing to bet you that one of the biggest reasons why is because of insurance. That insurance is a lot cheaper, but also they're offering a lot of incentives. So, you know, sometimes you get that 5% interest rate when everyone else is paying 7.375, right? So the first thing to look at is the age of the home. This is one of the eligibility requirements for many, many, many insurance providers, a lot of carriers. So if the home is old, more than 20 years old, that is the first problem. If it's more than 50 years old, that's another problem. And there's less and less, the older the home gets, the less and less carriers are going to be willing to write the policy. Another eligibility requirement that can save you money and, you know, basically get you to shop with as many companies as possible is the age of the roof. So if the roof is 10 years old or older, there's a whole bunch of companies going to cut you out. If it's 15 years or older, almost everybody is going to cut you out. Not Citizens though, not in Florida. And if it's 20 years or older, forget about it. You're pretty much SOL. You can't get insurance. And there might be some company that's going to give it to you. But quite frankly, they're just going to write you a letter really soon telling you you have to go and change your roof out. And roofs ain't cheap. Now, the next eligibility requirement has to do with really older homes, mostly the ones from the 60s and older. Now, not every home from the 60s qualifies under this, but this is something you want to pay attention to. You want to pay attention to cloth wiring. Now, it's literally what it sounds like. You have a wire and it's wrapped in cloth. So no wonder that there's a lot of fires with that. And a lot of companies do not want to insure that. In Florida, I think we're left with maybe 2 companies left, including one which is Citizens, the state-run company. So unfortunately, there's nothing you can do except to rewire the whole house. Well, if you can stay away from rewiring the whole house, stay away from it. It's very expensive to do that. It really ranges. I've seen it as cheap as $5,000 and I've seen it as high as $25,000, and these weren't big houses. And the last thing I'm going to talk about, eligibility requirements, has to do with something that a lot of agents don't know. Insurance agents should know this, but real estate agents don't. And it's the following. If there's a section of the roof which is a flat roof, usually that's found in a lanai. But unfortunately, a lot of people close out their lanais without running the proper permits. And they did this 20, 30, 40 years ago. So the county says, hey, this is, you know, not an enclosed area. But then when the inspection happens and the 4-point and the wind mitigation reports get done and the questionnaire happens for the insurance agent, they ask, is there an area that has a flat roof that is under air? And that means that it's part of your living space because it's air conditioned. And if there's a flat roof, they don't want it. Now, one other thing just came to mind about eligibility requirements, and that has to do with solar panels. So if you have solar panels on your roof, there are more and more companies choosing to opt out of insuring those homes because there's a lot of claims associated with it. And if you have a roof leak and you have solar panels, then there's a whole bunch of problems when it comes to who's going to pay for the removal and reinstallation of your solar panels. Now let's get into how we can save you some money. So the first thing is the third nail, and you might have heard of this, okay? But here's what it is. Homes from the 80s, 70s, and older, some of them have hurricane clips, and these hurricane clips might have 1 nail, 2 nails, 2.5 nails. I don't even know how that works. But if you can get third nail into those clips, whether they're single wraps or double wraps, that's going to increase your discounts. This is no longer about eligibility. This is now how to save money. And let me tell you about a story. I have a property that's an Airbnb, which is on an awesome street, nice, cute little home. And this home is from 1953, okay? So obviously it has problems. It has some old wiring. It actually has a metal roof, so that's the good news. But one of the problems is that it did not have 3 nails, and therefore I was paying a lot for insurance. You know, this is years ago, right? So back then it was $3,000 for an 1,100 square foot home. So here's what I did. I looked up what are all the ways that I can kind of fortify the home and make it a lot stronger so I can get wind mitigation discounts. And the best bang for my buck wasn't the hurricane impact windows, wasn't to redo the doors, it was to do the third nail. And here's the funny thing. I ended up paying a company, great company, they're called US Code Compliance, aka the third nail guy. He's a local guy who does the third nail situation. And he came out, and for $1,000, now mind you, this is years ago, I'm sure he's more expensive now. For $1,000, he was able to put in the third nail on this home, okay? Now, because of that, I ended up saving $900 a year on my homeowner's insurance forever. So I almost had that paid for. It cost $1,000. So I had 90% of my investment returned in the first year. That's a 90% ROI. And every year since then, I have continued to save and save and save. I love it. And so this is one of these expenses you probably want to look into. Even if you only have 2.5 nails, and even if it costs you $1,500, but you only save $500, just do it anyway, because that's only a 3-year payback, which is 33% per year on a return on investment. Find me a stock that goes up 33% a year, except for NVIDIA, maybe. And I'm telling you, you're not going to find any investment that pays that much. Okay, so here's the second thing that you can do to make sure that your insurance is not going to be totally out of control. Before you buy a house, just take a look. Before you even offer, just take a look at the brand of the electric panel. Okay, open it up, right? Don't unscrew it, just open it up. First of all, if you see fuses, run. You're not going to be able to do anything, right? Unless, of course, you're an investor. I would not run from that. I would welcome that, and I would, use it to beat up the price a little bit. But basically, if you have a fuse box, you're in trouble. Everyone's going to make you change it out to a breaker box. But then there's a few companies of breaker boxes that are really, really difficult to insure. One of them is Challenger. Look at that one. If you see Challenger, once again, you're going to have a really hard time getting insurance. Another one is Federal Pacific. If you see that, dude, it's basically the same thing. They are 2 boxes that have a reputation of burning houses down. So even before you offer on a property, if you want to have a pretty decent insurance rate, don't get houses with fuse boxes or Challenger boxes or Federal Pacific boxes. Your insurance is going to be really high. And if you already own a home and it is a Federal Pacific or whatever, then all you have to do is go get a new panel, then order a 4-point inspection, and then go requote your insurance. You're going to get some discounts forever. Change it out to a square D box. Okay, here's the next thing that you can do. If you have an older home from the 50s, the 40s, the 30s, anything before the 50s for sure, and then some homes in the 50s and the 60s, then like I mentioned before, cloth wiring. And cloth wiring burns houses down, so they're high risk, okay? Now what you can do is this: go get some quotes and then go and pin people against each other to get the best quote on reducing your insurance rates by rewiring your home. Now, it is expensive to rewire your home, but once again, that not only will this make you save money, but also one day when you resell it, that is a very good value add that you can say, hey, this is an old home, but it's been rewired and your insurance rates are lower. Now, one more thing, I know you know about this, and that's a roof, but this is actually the biggest thing that you can do to reduce your insurance rates. Now, half of your premium is going to be for hurricane protection, and half of it is going to be for everything else, right? So what you really want to do is have a roof that's less than 15 years old. Now, my last tip here is controversial. So here's what I recommend you do. Now, I'm not telling you to do this, but this is definitely something that can save you a ton of money when it comes to insurance. What I recommend is figure out a way to pay off your house. That way you're not going to be required to carry flood insurance or to carry regular homeowners insurance. But then carry liability only. You know, in case some kid is riding a bicycle and bashes his head on your mailbox or something, or some person is working on your home and trips and falls, decides to sue you. Well, what you can do is you can insure all of that stuff. Self-insurance is really simple, and a lot of people are doing it. You take that $6,000, you put it in a separate account. The statistical probability of having a hurricane and then having a hurricane deductible and claim from that is really low. Now, this may not pan out, this may backfire, but it's something that a lot of people are doing. And I know not everyone can pay off their house at it's crazy. When the median price is over $400,000, $490 in my area, it's not easy to go and pay off a house. But if you have the means, you know, make those extra payments and do your best, because the self-insurance route is really something that people are doing in states such as California and in Florida, where we actually have the highest insurance rates in the entire nation, averaging $6,000. That's just crazy.